So good evening, everybody. My name is Jarrell Muir. I am the president for the Urban League of Greater Oklahoma City Young Professionals. Just want to let everybody know that this meeting is being recorded, so people can view it at a later date. So if you want to say or do anything crazy on camera, do not. Um, so I want to thank everybody for hopping on this event tonight. We've had a lot of interest over this event. And we just realized that this is where a lot of us are right now, as far as just looking to purchase that first home. So we're hoping tonight's event is informative. We hope it's educational. And we do have a few panelists who are going to share their expertise, their knowledge, their experience. And we think it'll be great. So just to give you all a very quick introduction to the Urban League, for those of you who aren't familiar, the Urban League is just a national community-based organization, and with a primary mission of assisting African Americans, minorities, and the poor in achieving economic and social equality. The Urban League does that through programming in the workforce and career development areas, education and family development, housing and financial literacy, and social justice. The Young Professionals is just an auxiliary of the Urban League. It's a group of age 21 to 40-year-olds who support the Urban League's mission. And we kind of also are the energy for the Urban League movement. So for those of you all who want to know more about the Urban League, the Young Professionals specifically, you can visit our website at urbanleagueok.org/membership. Our Facebook is Urban League of Greater Oklahoma City Young Professionals, and Instagram is ULOKCYP. We can repeat those later on if we need to, but please connect with us on social media. We'd love to have you become more involved and just follow what we're doing. We want to keep more events like this going on. So we actually, before we get into the panelists, we actually have somebody from our affiliate, the Urban League of Greater Oklahoma City, on the call tonight, and she is going to discuss the Urban League's urban housing program, which ties in nicely to the event we're doing tonight. So Deidre Davis, we're going to go ahead and you can unmute yourself, and we'll allow you to speak about that program.
Good afternoon or evening. I'm used to afternoon meetings. Sorry about that. Good evening. I'm Deidre and I'm with the Urban League. I am the housing director. We handle home buyers education workshops. We do have that on the Urban League of Greater Oklahoma City's website. It is free of charge to anyone. Even if you want to go and listen to the workshop, you can go and listen to the workshop and not take the quizzes or the test at the end, and take the quizzes and test at a later date. But that gives you, once you take that, that gives you a certificate. And after you get this certificate, you can go, certain first home buyer programs like the Urban League. We are partnership with the city of Midwest City, and they have a first time buyers program that helps you, and they help with your down payment assistance. And you can take our course and use that certificate and give that to them, and that gives you the credit so they can allow you the first home buyer's down payment. But our certificate's good for anybody in the whole state. It doesn't matter what your economic is, but we do go for low income individuals to help them to meet the first home buyers so they know what they're getting into. A lot of individuals go, oh, I got to have a house. There's a lot of aspects in purchasing the house, getting your credit in the right area. You'll see a lot of things going, oh, well, we can get you in there with your credit being 620 or under, but most of the time it's 620 and up. But the higher your credit score, the lower your interest rate is. And that's what you're looking for. a lot of good things is, I know a lot of you guys are probably on Credit Karma, Experian. That helps you where you can see what's on your credit. You know, they take several things when you apply for the mortgage on your, to get a house. So they look at those credit scores, but there's so many credit scores that go into there. There's 3 major ones that they look at, and they put those together, and then they take the one in the middle. So you could have one that's 740, one that's 700, and one that's 670, and they're going to take the one in the middle. So you want to get them as close together as you can, and you can do that by, you know, making sure that when you're buying a house that your credit, there's no collections, so you don't have to pay all of those off and say, yes, I did this. So you want to make sure that you stay on top of your credit. The other thing that the Urban League offers is we are on a home program with the HUD, and we're overseen by OFA, which is Oklahoma Housing Finance Agency. And we, on that program, we can purchase 3-bedroom homes with funds, and we can offer it to low-income individuals. And that helps them get their first home. So we go in, we buy a home, we rehab the home, we put new roof on it, new hot water tank, all the major things, like we make sure the heat and air is up to date and in good working order. If it's not, we replace it. We do the flooring, we put in brand new appliances, we fully paint it, put brand new windows on it. We make the home great. So if we buy a home for $80,000 and we put $50,000 into it, we don't add that to the cost. So what we do is when we purchase a home, we rehab it, get it appraised. So if it appraised for $100,000, we can give most individuals $15,000 off of that. And that helps them purchase a home that's worth more and has more equity into it to get them started on their home buyers, on their first home. Because a lot of people nowadays don't keep their first home, but the first 5 to 10 years. When you're on certain programs, and that is very specific on the first home buyers, most of the time you cannot sell or rent out your home. It has to be your primary resident for 5 years, or you have to pay your assistance back. I would enjoy anyone and like everyone to maybe go on the website, on the Urban League's website, and review the workshop, get familiar with it, and it gives you a lot of hints on how to prepare for it. If you have any questions, feel free to reach out to me. Thank you.
Thank you, Deirdre. Now we will go ahead and introduce Jasmine Carter, who is one of the members of our programs committee on our board, and she's done a great job of helping put this all together. She'll be moderating the panel tonight, so I'm going to go ahead and turn it over to her and let her get the panelists introduced and go ahead and get rolling.
Thank you, Jarrell. As Jarrell said, I'm Jasmine Carter. I'm a part of the Urban League of Oklahoma City's Young Professional Organization, and I serve on the programs committee. So I'm really excited to be the moderator for this evening with this wonderful panel of experts in the real estate field. So before we get started, I figured we should go over a few rules so that we can ensure that the event runs smoothly. So first, everyone's done a great job so far. Just please make sure you keep your microphones muted up until the Q&A session later on at the end of tonight's event. And then if you have any additional questions, please save those for a little bit later after we've asked all of the questions, because you never know, maybe the question that you have might be answered. And we'll do a quick Q&A session. As Jarrell mentioned before, this Zoom call is being recorded, so please keep that in mind. And then lastly, if you have any questions that you might want to ask the panelists, they are going to stay on a little bit longer after the event is over, so you can talk to them directly. So I can go ahead and turn it over to our panelists. Adalia, we can start with you. Would you like to introduce yourself?
There we go. I'm unmuted. Yes. Hello, I am Adalia Sosanya. I am a licensed realtor with Chamberlain Realty here in Oklahoma City. It's actually out of Moore, the office is. And I've been licensed since 2016. I started my career as a new home sales consultant. So I sold new construction homes from one of the largest builders here in our state. Some of you may be familiar with Home Creations. And from there, of course, when you work for a builder, you don't have to have a real estate license. But after that experience, I decided, to go full time, get licensed. And so I've been licensed since 2016 and I love it. I work primarily with first-time home buyers, first-time home sellers, investor clients, as well as downsizers now. I'm noticing an increase in that. So that's me.
Thank you. Cameron, would you like to introduce yourself?
Yes, excuse me. My name is Cameron Buckner, mortgage loan officer at Allegiance Credit Union. We're based here in Oklahoma City, but my office is in Edmond, Oklahoma. I've been an MLO, mortgage loan officer, MLO for almost 2 years now. And let me stay in compliance. In my NMLS number is 1856323. Get that out there. But yes, I have been a MLO for 2 years, and I do all types of loans, help all types of people, but we'll get into that later on down the line.
Thank you, Cameron. And then we also have Adrian. He is our first-time home buyer that's going to be serving on our panel this evening. You want to introduce yourself?
Hey, everybody. My facet is I pretty much run a nonprofit here in Oklahoma City. It's called BDPA, and that stands for Black Data Processing Associates. And we're actually rebranding it as Kaleidoscope here in Oklahoma City. What BDPA is it's a national organization with about 30 chapters scattered across the United States. And so we're basically creating an Oklahoma City chapter here. And basically we're going to make it an IT central hub. So that's pretty much any type of technology that you can think of. We're trying to figure out how we can make it to where we can make the surrounding community aware, especially minorities, of the different opportunities amongst the technology field. And so different things like what we're doing today or classes and courses, we're trying to figure out how we can exactly ignite that spark within the younger generations and inspire them to apply it to whatever career field they go into. So that's kind of what I do.
Thank you all. So let's go ahead and get started with our questions. So this first question is pretty basic, and you probably hear this all the time. So what are the requirements to own a home?
So I'll take this question. Something that we look at as lenders, first thing first is credit score. As Ms. Davis said earlier, we do look at credit scores. We do pull all three bureaus. It's called a tri-merge. We pull all three bureaus and take the middle score as the decisioning credit score. And different loan types require different minimum credit scores. Some may be 620. You can actually get a loan if you have a lower score than a 620, but it all depends on what type of loan program, loan type that you're looking for. Something else that we look at is assets. And by assets, we mean like how much money you have saved up to go towards the house. Some people say, I don't want to put any money down, and depending on how you structure everything, that may be the case. But once again, different loan types require different amounts of down payments as well. But We do look at assets as well. And then also job time. Not a lot of people think about that, but most lenders require a minimum of at least 2 years of job history. And you don't have to work in the same company. You just have to be consecutive. We don't like to see gaps or anything in employment. Now, COVID kind of threw a wrench in everything because a lot of people lost their jobs, but there's avenues around it. And so those are the things really. Credit is the biggest thing, assets, job time. And then along with credit, we do look at what we call a debt to income ratio. And so what that means is we take your monthly debts that are reporting to your credit report. So not the housing expenses, not your electric bill, the Wi-Fi bill. We look at everything that's on your credit. So your car note, credit card payments, what else, medical bills, different things like that that report to the credit. And then we take those monthly payments and then divide that by your monthly income. And whatever percentage that kicks out, that will equal your debt to income ratio. And so different lenders have different requirements on what the max debt to income ratio could be. Some may be 43%, some may be 55%. So it just varies from lender to lender. And it also depends on the loan type as well. I know some FHA loans require their max is 55% versus conventional being 43%. So it just varies from loan type to loan type. But those are generally the biggest things that we look at and that are required for as far as owning a house.
Thank you. Does anybody else want to chime in, or Adalia? I think you unmuted.
Yeah, no, he's right. I was going to add to the student loans is I know the other part of what is factored into that. So absolutely.
Yeah, and with student loans, and not a lot of people know this, but we take 1% of the student loan balance and add that into your debt to income ratio as well.
I did not know that. Thank you. Our next question is, at what point should I begin looking or preparing to buy a home? Like when should I start doing this?
I'll take that question. And I know that's like the fun part, right? Is getting out and seeing all the houses. Thanks to HGTV, we get all this exposure to the home experience. And the best way to really answer that is it's two parts. You can look online at any time you want, but when you are in a position to actually make a move on a home, I always recommend for the buyers that I work with, every time I meet with someone, we do a consultation. So I let them know, we're going to look at homes in person when we have pre-qualification in hand, because there are things that are involved with having a seller, leave their home, especially now with COVID. There's a lot of safety measures that are in place with visiting homes. So we really only want to bring buyers who are in a stable and ready position to move forward, possibly on an offer, before we actually physically start to look at homes in person. But you can look online at any time.
And I'll add to that as well. As far as she said, make sure you get pre-approved first or pre-qualified before. And then as far as preparing, I say you can prepare now. You can actually go to freeannualcreditreport.com and you get a free credit report. You get one free a year, I believe, and you can actually see what's on your credit report. So that way, whenever you are ready to get pre-approved, you can already know what's on your credit if you got to pay off some stuff. That way it makes the realtor's job a lot easier once you're pre-qualified before you go start looking.
Thank you. Since we just mentioned pre-qualification and pre-approval, can someone explain to the audience what is the difference between pre-qualification and pre-approval? Because there is a difference.
Yes. So the difference, I'll take that question. So starting out with pre-qualified, pre-qualified is basically you come to me for a consultation, you tell me how much you make, how much you have saved up, and then I pre-qualify you based on what you tell me. with no documentation in hand verifying what you just told me, I pre-qual you on your word. Now, pre-approved is after I get all your income documentation back, get your bank statements, I pull credit and everything, and I validate you make how much you make and you have how much you have saved up. Then I plug those numbers in, and then I say, okay, you're good to go buy this house. Then that's when you're pre-approved after you submit documentation. But so long story short, pre-qual, you are good without documentation. Pre-approved, you're good with documentation.
Perfect. So what documents would someone need to bring in to you?
So for me, when you're purchasing a home, the documentation that we require is the last 2 years of tax returns. And then if you're self-employed, then we require the last 2 years of your personal returns and the last 2 years of your business returns as well. If you're not self-employed and you're just a W-2 employee, then we just require the last 2 years of your W-2s as well. Once again, tax returns. Something else we require 30 days worth of pay stubs. And it has to be a consecutive 30 days worth of pay stubs. And then if you're already shopping for a house, shop insurance as well, because we will need a copy of an insurance quote on the house. And then that's it.
Thank you. So this question, I'm sure all of you get often. Can I purchase a home with bad credit?
I'll take that one as well. Can you purchase a home with bad credit? Once again, that goes back to the different loan types. But for me, working at a credit union, a lot of people feel that credit unions don't offer a lot of different loan types and loan programs. They may jump to a bank because they feel bigger banks offer bigger things. However, that's not always the case. But as far as bad credit, like I said, it just depends on the loan type that you're looking to get in. And so the minimum score typically people say is 620. But like I said, you can get a house with a lower credit score than a 620. But at Allegiance, because I work there at Allegiance, I mean, once we pull your score and it's not up to what our minimum qualifying is, we can actually walk you through the process of getting your score up. With Credit Builder loans, we offer financial counseling to help you get your scores up to where they need to be. So if you have bad credit, I don't like the term bad credit, it's just not good enough credit right now. So you may not be ready today, but I'll walk you through the process and get you ready in 6 months.
So my next question is, how do I go about finding a realtor?
So there's several ways, of course. Probably the best way is if you have friends that have bought homes recently or at any point where they had a positive experience, and that can come from a referral source. And that is, probably really the best way most realtors get their business is from referrals and past experiences. It gives you an idea, especially if you know that person, they can probably share a little bit more details about, their experience with that agent. Of course, you can always attend open houses to meet realtors there. There's reviews that you can read online at some of the major sites like Google and Zillow. But I do think probably the number one way is through referral sources. And of course, events like this. I've had the pleasure of speaking at Community Action in the past to some of their, through their courses, and have met clients that way. And so explaining the process of home buying, building relationship. One of the things I always like to tell people, when you are working with a realtor, you're spending on average about 30 to 60 days with them. So that relationship is everything. and sometimes it doesn't work out. And I always want people to know there's a freedom. You may start working with them, but sometimes you don't. You come across the process and there's some things that are not lining up. So don't be afraid to communicate that if there is a problem with your agent. But make sure that the personality styles match and that person is available for you, working for you full time, and especially right now in this market where we have a lot of multiple offers. So property may come on the market and be gone in a matter of hours, and you want somebody that's responsive and able to handle the process for you. So all of those factors matter, and they tend to be more favorable when it comes from a recommendation.
That's good. So how would I go about finding a home, my dream home? What do I need to do?
So I guess that's a me question again. Okay, so of course, right now, Zillow is probably the #1 site people go to. I get people that say, hey, I'm looking online and I want to find that this is a home that I want to see. And it is a data source. It's for the consumers. It's a free site for people to use. And I don't tell people not to use it. The only thing with that, knowing that it is a data company, they pull their information from distressed properties, foreclosed homes, short sales. So sometimes the information may not be as accurate. And it also for sale by owners are able to list their properties, and they may have sold the property and it's still showing in Zillow. So the best way really is if you are working with your realtor and they've gone through the process of knowing the financing terms, they know your budget, they know what you want in the house, they know, how many bedrooms, what's important to you. We can set you up on a personalized search through the MLS, which stands for the Multiple Listing Service, and it allows it to be a customized search to you, where you will get listings of the homes that are only specific to the criteria that matter. So you're just not all over the place, possibly looking at the $1 million home when the budget is set at $250,000. So making sure we're staying within those boundaries of the home, the realtor can definitely set that up for you. And of course, yeah, you can definitely attend open houses if you see properties that are available on the weekends to go see. But yeah, the best way is for us to have that connection set up for you so you can only see the homes that meet your budget.
I also want to jump in and add on to that. So pretty much just relating my story to this, that's exactly how our process went. We were looking on Zillow and just were looking in areas that we knew we wanted to live just because of our workplaces. And also we were looking for certain features within those areas. So not only schools, but for me, I'm also a coach. That's one of my main sources of income. So a park right next to my house was actually a huge feature that I wanted. And so that's something that helped us locate our house. And then also our realtor actually, whenever we told him the types of houses, we did get emails. I think it was the same thing that you were talking about as well, to where we were getting custom searches compared to the results that we wanted. But our realtor actually took us through, had multiple days to where he took us through like 5 or 6 of those houses that were high on our list, and actually had like some method to where he could virtually get the key, go in, show us the home. He was registered underneath it, told us the ins and outs of it from his perspective, and then he would lock it back up. And so we actually got kind of like a in-depth search along with working with Zillow. Yeah, that's a part of the showing tours that we line up for you to go and see the homes, which the access that we do have is specific for the real estate agent that has reserved that time slot to look at the home. And so yeah, that is a customized option. Another thing too that we have the benefit of having a realtor, some of the homes that you see that are in the MLS, or there may be a property that you want and you don't know about, and because we know the specifics of what you're looking for, we have access to what's called pocket listings. So, and of course, in addition to working with buyers, I also assist home sellers, and sometimes I'll have a property that's not even on the market yet, and I'm in the process of listing it with the home seller, and there's certain features and things that I know that may work with the buyer. I will tell my buyers first about that home, and so of course, just because I'm aware of that information, is perfectly legal. And it is just a way for us to be able to help the process go a lot faster. However, of course, if it's not a fit, we do put it in the MLS. But there are some off-market properties that can become available for certain people in situations like that.
Thank you. So now that I have my real estate agent, when do I pay them, or how do I go about paying them, and how much do I pay this real estate agent?
So our fees for services are already negotiated when that property is on the market. So the buyer, you are the buyer, we're representing you as the buyer's agent, and we do not get paid until you successfully close on the home. So there's a lot of upfront that we do. Of course, there's a high risk to realtors to be able to provide a high level of service and excellence in that transaction. But our duties are fiduciary. So there's a level of trust that is taking place. But that's already, again, it's negotiated. There's a percentage that's negotiated with us in the listing agent that is handled with the property. And so, a lot of people think that, okay, well, are you thinking about your commission with my home? It's a percentage. So regardless if it's $100,000 home or a $300,000 home, it's based off a percentage. And so we are still in a position where we have to provide a level of service. However, I will say there are times where owners will list their properties and don't hire a realtor. And there are times where we do have to have some negotiations that will possibly be costs that could be added on to the buyer. But in about 95% of the cases, the seller pays the real estate agent's commission, and the buyer does not have to pay anything out of pocket for working with that agent.
So are there any upfront costs of purchasing a home?
I'll take that one. So as far as upfront costs, the only thing upfront on my end that you would have to pay is for the appraisal. That is the only upfront cost that you will have to pay. And typically the amount is $600, but it depends on the appraiser really. The average amount is about $600. And also as far as fees, we do have closing cost fees. And so with closing cost fees, a lot of things go into that. You have whatever the bank charges to do the loan. So originate the loan, underwrite the loan, and process the loan. Those are the bank's fees. Then you have title company fees. And so whenever you do close on a house, you close at a title company. And it's kind of like a title to a car, but it's to a house. It just shows that you own that actual house, and whatever title company you close at, they have their fees. Sometimes their fees are super expensive. Sometimes they could be cheap depending on the title company that you use. Then you also have your taxes and government fees, and those could vary as well. And then you have your recording fees. So to file the mortgage and to record everything with the state showing new ownership of a property, there's a cost for that as well. But we do have a cost breakdown, and that's something that I do go over in my initial loan consultation as well, to kind of give you a heads up on how much we're looking at is going to cost to purchase the home. But with closing costs, I mean, if you have a great realtor, they can negotiate closing costs with the seller, and you can actually get some seller credit. So that way you as the buyer don't have to come out of pocket for everything.
I like that. So can you tell me, Cameron, what are the different mortgage options? I hear about 15-year, 30-year. So tell me what that means and the differences between the two or three.
Sure. So the different types of loan options, the most common one is a 30-year mortgage. Typically people go out 30 years on the mortgage. That'll be your cheapest payment. So the shorter term you have, the more expensive your payment is going to be. And the longer term you have, the cheaper your payment is going to be. And so we have a 30-year mortgage, and then we can drop it down to a 20-year, 15, 10, and in some cases 8 and 5. But for purchases, typically people go out 30 years. I've actually seen a case where they went out longer than 30 years, but I don't know who would want to go out like 40 and 50 years on a house, but that's what they did. But for most lenders and for like myself, my max term is 30 years. And I put all my first-time home buyers and purchases in 30-year terms because, like I said, you get your cheapest payment that way. And most people don't even stay in the house that long, but I mean, you get your cheapest payment, and then if you're smart, some people like to pay additional on it to knock it down, knock that term down some. But the cheaper your payment, you're going to get on a 30-year term.
Can I just add to that? Because that even with that 30 years, sometimes that scares people, especially when they get to the closing table and see that amortization schedule. It's like, oh my gosh, all of these months of payments. But you can even getting the 30-year, you can treat it like a 15 and pay it off early if you want. You know, those of you that are on the path to financial freedom and trying not to have a mortgage over time, or if that is a home you plan to keep, you can double up on the payments and treat it like it's a 15.
That was actually the big selling point on my girlfriend, actually, us getting a was for me, I thought that was, you know, a really huge step in life that, you know, was 10 years away. And it's something to where whenever I looked at the 30-year, you know, time period, and I look at the comparison of paying for an apartment, I'm like, okay, I'm paying $900 already, another $300 on top of it. I have my own crib and 2 more rooms and all these amenities and things like that. And not only that, it's an investment. Because you look at it as this big sum of money, but the thing is all the money that you're paying off is going towards an end goal to where you're just moving up after that. That's how a lot of people actually get a lot of wealth actually in the US. So that's how I looked at the interest rates, at least with our process. It was something that made me more willing to buy a home.
Yeah, our president today just said homeownership is an essential tool to wealth creation and can be passed down to generations. So definitely the earlier you start, the better you can be on track to building wealth.
That's right. So do I need a down payment to purchase a home?
I'll take that one. So once again, different loan types require different down payment amounts. So the short, quick answer, yes. But however, like I mentioned earlier, all loan types require some type of down payment. Now, as far as you paying for it out of pocket, if you go through like down payment assistance programs, then they will actually grant you funds to use towards your down payment. But every loan type requires some type of down payment. FHA requires 3.5% down. Conventional is 5%, at least a minimum. You can do more, but the minimum is 3.5% for FHA. Conventional is 5%. So essentially, yes, you need a down payment, but as far as coming out of pocket for it, you can go out in the community. There's a plethora, I should say, of ways to get free money out there.
That's a good point. So we've heard the term down payment assistance and first-time homebuyer programs. So can someone tell us, like, what are first-time homebuyer programs and are they worth it?
Yes, they are worth it. Once again, it's free money. And then, and sometimes, and this is something to be cautious about when you are researching down payment assistance programs. So down payment assistance programs is exactly what it is down payment assistance for a house. But something to check into is some down payment assistance are gifts and some are grants where you have to pay back. And so that's something to research. For us at Allegiance, we offer a down payment assistance program where it's a grant and you don't have to pay it back. As Ms. Davis said earlier, some do require you to live in the house for a minimum of 5 years, but others do not. For us at Allegiance, our down payment assistance program does not require you to live in the house for 5 years. There's no set requirement on how long you have to live in the house. So if you want to use the down payment assistance and you move out 6 months, that's perfectly fine. You don't have to pay that back at all. It's a complete grant. Well, it's a gift. I'm sorry. It's a complete gift that you do not have to pay back. But that is something that a lot of people don't know when they are researching down payment assistance programs. And then just to kind of give an example of different types of down payment assistance programs. You have community action that offers some down payment assistance as well. I believe it's like up to like 14 grand or something like that they will offer to go towards down payment assistance. And then as Ms. Davis said, the Midwest City offer as well. I believe theirs is like 5 grand. If you're moving to Midwest City, they will actually offer you some money as well. So depending on where you're purchasing a house, you may want to check and see what type of different programs that they have just for moving there. And then also check with the lender as well and ask them what type of down payment assistance programs that they offer as well. And also ask them what type of discounts that they offer. Some may say, oh, I don't have any discounts, but some may offer discounts on where you work, where you go to school, that type of thing. For me personally, at Allegiance, we do offer a down payment assistance towards, it's not really towards down payment assistance, it's just a discount towards first responders, healthcare workers, teachers, clergymen. It's through our Homes for Heroes program that I'm the lead loan officer on. And so just a small discount from different types of programs like that could also help you as well. But it varies from lender to lender. So you just ask. The worst they can say is no, they don't have anything.
That's true. So what bank do I use to obtain a mortgage, or where do I go to find a mortgage?
Me.
Hold on, real quick. We have somebody's hand raised. If you can just wait until the end, we're gonna have a Q&A session and we'll let you get all of your questions out.
All right, so to find the institution that you use, I mean, come to me, but if you don't come to me, then I would say choose an institution that you know, like, and trust, and that you already have an established relationship with, because that's something else that people look at, most lenders look at as well, on the relationship that you already have built with your current institution. So like if you bank at Chase or Bank First, Mid First, wherever you bank, I would start there because you already have an established relationship with them. Or if you know a lender or a friend that can refer you to someone that they use, that they already have a relationship with, then I would do that as well. But choosing an institution is an institution that you know, like, and trust.
And then my other question is, how long does it take to close on a home?
Can take that one. So it really does depend on the loan program. There's, of course, VA, which in the real estate world is probably the longest one to close on for veterans, about 45 days if you are using a VA loan. But for FHA, conventional, and some of the other loan programs out there, on average, it takes about 30 days from the time you sign the contract to the time you make it to the closing table. There's sometimes if it's, it can go a lot faster, but on average, it is about 30 days for closing to happen.
Okay. Adrian, how long did it take for you all to close on your home?
It took about 45 days. So again, we started searching in January and really found our realtor early February and started going through that entire process of just learning and just visiting homes and just understanding it all. And then we signed completely April 1st. So, and then moved in not too much longer after that. So it was a pretty quick process. And again, the realtor helped out a lot because, again, they kind of showed us the path. They, provided all the resources we needed. They explained everything. And again, it was quick and easy. It was a little scary at first, but usually you have a lot of resources if you have the right references and people within your social network that you can confirm the information that you're getting.
Thank you. So what all goes into submitting an offer on a home?
Okay, so with that, it's a legally binding contract, and I always try to think of a real estate agent as somewhat like a mini attorney, because we are dealing with state contracts from the state of Oklahoma, the Oklahoma Real Estate Commission, which we refer to as OREC, where they are the organization that oversees our licensings, and they change out the contracts. And so we have to pull, as licensed realtors, we have to use the state contracts when submitting offers. So you have your six-page contract, you have your financing terms, which identifies how you're going to purchase the home, whether if it's being purchased through cash or if you have a loan addendum attached to that. We also need to present the pre-qualification letter or pre-approval, whichever one we have in place. And then there's disclosures that are attached to that, disclosures that you and the seller both have been made known of, as far as just certain things up front that you need to know about the home, that the seller's knowledge is regarding the home on that. And then of course, in the contract, it outlines the terms and the conditions and the financing agreement. You also are stating how long you plan to have your inspection period done. So your real estate agent is aware of how to construct the contract, all of the things that are required with that. We put it all together and submit it to you to sign. Mostly nowadays, we can do it all electronically. And the copy is given to the listing agent that submits it over to the seller, and they review all of the terms of the contract. And then from there, we are the ones who also communicate that to the lender, the title company, and making sure everything stays moving forward for you after that contract has been agreed on from all parties.
Thank you. So you mentioned that a lot of the documents can be signed digitally. So what about like looking for homes and, doing the home buying process like virtual, since we're in a pandemic? Have you seen that that's happening more often now? And how are you kind of, adjusting to doing that?
Yeah, so 2020 definitely put us in a new light of how we had to do business. And when we were declared essential, we were all excited because we knew home ownership is essential, especially with the home being the place that everybody had to be. It put us in a position to navigate the world in real estate now, with being able to do virtual tours, show homes virtually. I know some of the changes even with the title company with how they're able to do closings now, handling documents electronically. So yes, right now we can meet people in person to look at a home. There's just only so much you can see online. So we do wear masks. We take all the safety precautions before entering in homes. But we have noticed an increase with people wanting virtual tours. So now what we do now as realtors, we have the option to do virtual home tours with our listings, how we present the homes. We have, there's basically a unique way for you to go and do a tour of the home without having to see it, and can get through. It's a matter report is what it's called. So it allows you to kind of scroll through the home and look through you can, navigate it up and down and look at the ceilings, the walls, and kind of turn things in a special way if you just don't want to visit the property in person. I have had people buy properties sight unseen, but today we are still visiting homes. People still want to see it. They want to pull the drawers out. They want to come measure to see if that master king size bed can fit in the master. So, I mean, there's, we still do visit homes in person, but virtual options are available.
Awesome. So what are some common mistakes that you all have seen, with the home buying process, whether it's yourself purchasing a home or what you've seen like your clients go through?
So I'll start with this one. First mistake, the biggest mistake of them all, communication. Failure to communicate with your lender and your realtor will cause a deal not to happen. I'm big on communication, and so just communicating with me, letting me know like what's going on will help me. Something else, if you're starting the process, do not go and buy a brand new car. When you're trying to buy a house, don't open any new credit, because that goes into everything that we calculate. Communication, don't open any new credit. So don't go get a new credit card in the process. Don't go buy a 2021 Challenger or something in the process. And something else that I've seen, somebody actually quit their job in the middle of buying a house. So if you quit your job, you don't have any income, which means you can't afford this house. And so communication, opening new lines of credit, quitting your job. Now, if you do switch jobs during the process, that's fine. As long as the numbers still weigh out, then you'll be good. Now, switching jobs is fine. Quitting jobs is a big no-no. And so the biggest thing is communication and opening new lines of credit are some big common mistakes.
Yeah, I ditto all of that. I actually pull from lenders when I talk to people, say, hey, here's the do's and don'ts. Yeah, so I would say from my perspective is, people failing to understand what is involved in the preparation of the paperwork with getting it to the lender, because I always try to tell people, hey, once we go under contract, there's going to be some additional documentation that you have to provide, and your file is going to go through what's called underwriting. And that's just a second set of eyes after the lender that's going to look at things, and they're going to kind of pull and say, hey, we need this, or what's that, so preparing my buyers for the process of, the communication that has to happen after the offer is submitted, and the thoughts around the inspections, because that usually trips a lot of people up, is when they get to the inspections, that inspector's job is to find a problem. You pay them to find problems on the house, so they're going to find it. And you don't be overwhelmed by it, because some stuff, yes, you need to pay attention to. Let's have the seller address it. Can you monitor this, or is it something that needs to be replaced? So just making sure, people don't lose it when we get to that part of it. And, we wear a lot of hats. We come as mediators, therapists. I have 3 kids, so I have a high level of patience sometimes, but preparing people for what this whole process is going to look like once we go through it, because it can seem like it's overwhelming up front, at first, but it's, we take it in steps. So that's the thing. You don't have to take it all in on day one. As we get to the parts that we need to address, well, let's prepare for that. But the communication is everything.
Yeah, and to piggyback on that, along with communication, something I tell my borrowers up front, like if you don't understand something or if you have questions, please ask, because I don't want you to continue on through the process not understanding what we're doing. What I like to do with everyone, I like to educate, and I walk them through every step of the process as well. From the time you initially submit your application till I'm sitting next to you and you about to sign your life away on all these papers. And so, my goal is to educate each and every person, so that way later on down the line, because this isn't going to be your first and last house you're going to buy. And so later on down the line, we can always build that relationship as well. But communication and just educating, and just if you don't understand something, please ask, because this is a big investment. And if you go into it with questions, unanswered, then you'll be regretting it after you sign your life away, as I call it.
And I got one more thing to add to that is having too many heads involved in the process that are not a part of the loan. If it's you and your spouse, that's great. But when you bring other family members or friends that maybe bought a house 30 years ago, or, bought a house 2 months ago, their situation is unique to them. Your situation is unique to you. So I would say trust your real estate agent's advice. Again, if you don't know something, ask a question, but also trust your own instincts, because we're all adults. We're making a decision. And I always tell people there's no such thing as a wrong choice. It's the decision you make with the best information that you have at the time. And again, if you decide to sell the house, you can sell the house, but it's a great thing to be a homeowner and trust the process, trust the people that you have working for you. We have a fully vested interest in the success of your outcome. So yeah, that's what I would definitely add to that.
So my advice that I have, first off, you guys are amazing. The way that you guys are handling one, like education, and the way that I know you guys deal with your clients. I had a similar experience with my real estate agent as well. However, looking back on the situation, I wish that we had been given more of a resource for the little things whenever it came into the home buying process. So I have a lot of like little things that I would have gone back and changed in terms of, like, for example, the inspection report. When we got our inspection report, my real estate agent, whenever we were going over it, because I'm a first time home buyer, I'm like, what does it cost to fix this? You know, this is broken. Is this a major thing? Is this an issue? Do you see this a lot? You know, is this house good in terms of like what we're trying to pay for it? And he assured us, you know, through and through, you know, yeah, this is good. You got new HVAC. You have, they say, new PVC, new piping, new plumbing, all of this new stuff. And so I'm like, oh, wow, okay. And you're guaranteeing this. And, you know, later, you know, we move into the home and then things start going wrong. So, you know, from water dripping down from the house, from the ceiling, to the master bedroom leaking, to all sorts of stuff. So I think earlier you guys were talking about a disclosure statement. And so that was something to where whenever I went into this home buying process, I didn't realize what they could walk the lines on in terms of what they could disclose. So in terms of like new HVAC, what was actually new was the unit and the actual, I don't know what the term is, but the coolant in the attic, to where the actual like machine that is, you know, giving the current throughout the house. And you can tell that I don't know the exacts of everything. I don't know everything about it. However, the things that connected the HVAC were old. And so they were able to say that, okay, this is new, but in reality, only parts of it were new. And so they didn't disclose all of that properly. And so that's something to where that's more reflecting on that seller instead of the system. But it's something to where you've really got to watch out for that. And something that would help, you know, a lot of new home buyers is, one, when you do an inspection report, get estimates and numbers. So whenever there's a problem wrong or something that you see, don't just say, is this a little problem? Say, okay, what's the cost to generally fix that? Because at the end of that inspection report, when you're a new home buyer, you just see a lot of reds and yellows and, okay, hey, this is wrong, or this is okay, not a big deal. But you may not know exactly what the big picture is. If you have it in cost, you can look at that inspection report and go, whoa, okay, all these little problems actually end up being $50,000 on top of the asking price for the house. And that in turn changes the entire scenario in your mind. So look for open permits, make sure that you're well aware of what that is, because that's something that you can look into on your own. You don't need your real estate agent, or you can ask your real estate agent to do it. Two, I ask you to ask them about the different steps in the home buying process for little things like that. And then three, again, just like you guys were talking about earlier, you've really got to make sure that you find people that you trust through this process. Again, you got to find people that, you know, you can check their character and are willing to work with, say, outside people such as your parents, and not saying that you bring them into the process, but have them come into the home and check things out and kind of like get a feel of things. And again, I think that's very important, to not have them interrupt your process, but to bring in different outside resources to give you a different perspective on the house. Because you should involve your family, you should involve educational resources that you've researched, and you should ask questions, so that way you can continue to learn and capitalize on the mistakes you make, because there will be some.
Thank you so very much. That actually wraps up our panel questions for now. We're going to open the floor for audience questions. So if you have a question, there is a blue icon at the bottom where you can raise your hand. I know we had a question a little bit earlier. Okay. So you are more than welcome to unmute yourself and ask away. You can go ahead, Bailey.
Perfect. Sorry, I didn't want to jump in before the person who had their hand raised first. I had a few questions, and I'll just throw them out there, and then whoever can ask them in whatever order. So we talked about different loan types like FHA and conventional. What are the pros and cons of those different types of loans? Like which one is better for what situations? And then I was wondering if you guys could talk about new build options in Oklahoma City. So one thing I've been seeing around town is I've seen people say, you know, new builds in Oklahoma City, but it's like Arcadia or Yukon or more, and not necessarily like in the Oklahoma City area. So are there new build options in Oklahoma City? And can you talk about the difference between buying a new home versus buying a previously owned home? And then my last question would be, when you're given that quote of how much, you know, you would be approved for purchasing a home, should you take that full amount for upgrades on a home, or should you only take, you know, the value of whatever it takes to close? So thanks for entertaining my questions.
Okay, I'll start. So to start on your first question, the different loan types. So yeah, I did mention FHA, conventional. Another loan type is VA loans. Those are for your military people, veterans. Now the pros and cons vary based on your different situation. So I'll start with FHA. FHA requires a smaller down payment versus conventional loans. So with FHA, that's a big pro. It's a lower down payment. Now, something else to keep in mind with FHA loans, you do have an upfront mortgage insurance premium that is tacked onto your loan amount. With FHA loans, that stays on there for the life of the loan. It's just an additional insurance that protects the lender as well. It could vary cost-wise from like $25 a month, or I've seen cases where it's higher, like at 200. So it just depends on the loan amount and everything. But it is on there for the life of the loan unless you refinance to get it off. Now, conventional, that typically requires 5% down. So for people that just have money just chilling, or if your family's going to help you out and you don't want to pay the MIP insurance or PMI insurance, they're the same thing, just interchange the acronym. If you don't want to pay that for the life of the loan, then we can go conventional. So the different the cases vary based on your situation. So if you're first-time home buyer, don't have a whole lot of money to put down, then FHA is probably a route to go. That way you don't have to put $5,000 down versus 3.5, depending on the size house you want. As far as new builds, I hope that answered your question. Did that answer your question on pros and cons?
Yes, it did. Thank you.
Okay. Now, as far as new builds, some people do list new builds out in like Arcadia and everything, but there are homes, new build homes being built here in Oklahoma City. There are some actually out in Edmond. You can look up Tabor Home Creations. They build a lot of homes here locally. And then as far as buying old and new, it just depends on what you prefer as a home buyer, or what you like in your house. A newer homes are more modern than the older style homes. So it just kind of varies. And then you mentioned as far as the amount and everything, like once you're pre-approved for a certain amount, can you use that full amount to make upgrades and everything? So once you're pre-approved for a certain amount, that is your purchase amount. It doesn't include the upgrades to the house. And so whenever if I pre-approve you for $100K and then you send me a contract and the purchase price is 95, then you're fine. The whatever I pre-approve you for is the max amount that you are qualified for to spend on a house to buy it, not to make upgrades to it or anything, because the loan amount is actually loaning you to purchase the house and not to make upgrades to the house.
Thank you for that, Cameron. Bailey, did that answer all of your questions?
It does. Thank you so much.
Perfect. So we have another question. Is that Tanish? You are more than welcome to unmute yourself and ask away.
Good night, everyone. So my question is, what if you do have a big down payment, but want a conventional loan? Does your credit score come into play?
Yeah, so credit score comes into play regardless of whatever loan you get. Now, as far as the big down payment, so if you're putting down 20% or more, then you won't have PMI insurance on your loan. And so once again, what PMI is just an additional insurance that is added to your monthly payment that protects the lenders. And so if you're putting down 20% or more, then that will not be on your loan. But if you're putting down just 5% or anything less than 20%, then PMI is on there. But as far as like a big down payment, if the lenders are truthful and factual when they're doing their job, then they will have to be in compliant. And so if you're putting down a big down payment, they're not going to overlook like, oh, if they have a 500 credit score, but they're putting down 70 grand, we're going to approve this loan. Because if they get audited, then they could be out of commission and lose their licensing. But even if you're putting down a big down payment, credit score still does come into play regardless.
Perfect. Did that answer your question, Tanish?
Yes, thank you.
Do we have any other questions before I turn it back over to Jarrell?
I'll make one more comment before we do that. Something else that we didn't mention in the question, another term that is thrown around when you're looking for houses is escrowing. And so what escrowing is just it's a collection of your taxes, your property taxes, and your homeowner's insurance. So whenever you make your full monthly payment, some people call it PITI, and what that stands for is principal, interest, taxes, and insurance. And so whenever you do go to purchase a house, you have to have property taxes. That's mandatory. Wherever you buy a house, there is always property taxes, and you have to have homeowners insurance. Now you do have, whenever you make your monthly payment to your lender, you can also escrow on your loan as well, which means whenever you make your monthly payment, it includes principal, interest, taxes, and insurance. That's the best option personally, because you don't have to worry about if your property taxes are going to get paid or if your homeowner's insurance is going to get paid as well. The lender will actually pay that for you. Now, if you're putting down 20% or more, then you actually have the option to escrow if you want. And so that means if you do not want to escrow, that means you will have to take care of your own property taxes and insurance on your own. But if you do escrow, then the lender will actually take care of the taxes and insurance payments for you. And those amounts vary on county, depending on which county you decide to move to, depends on the amount of the property taxes.
Thank you for that. Well, that wraps up our Q&A session for the evening, I do believe.
I think she had another question.
Oh, Tanish, do you have another question?
Yes, I do.
Yeah, go ahead.
All right. So I'm a veteran and I just got out of the Army not too long ago. So I'm looking into buying a house, but they were telling me that there is something called the VA loan, to whereas I don't have to pay no property tax since I'm 100% disabled. Like, so now my question is this, let's say I do decide to buy a house right now. Will I still have to pay the, what is it called again? The property taxes and pretty much any type of taxes that they have. Will I have to still pay for it, or will the VA take care of it?
So for VA loans, just a quick background on VA loans. VA loans, they require 0% down. You can finance the whole purchase price. Now, as far as property taxes, if you're 100% disabled, you should be exempt from paying property taxes. And so, so you will not have to pay property taxes. The government actually will take care of that for you. I believe there's a letter that shows that you're exempt from having to pay property taxes if you're 100% disabled. And so, as far as VA loans, we can finance 100%. So if the purchase price is 100,000, we can finance the full 100,000 for VA loans. And so, in regards to the property taxes, if you're exempt, then you don't have to pay property taxes.
Okay, thank you very much.
Mm-hmm.
There are any other questions? Go ahead and unmute yourself. If not,
Yeah.
oh,
Sorry about that. So I have a question for, what's his name again? I'm sorry, Cameron.
Yes.
So with the lender, if at, close to closing, or say some stuff happened and it didn't make any sense, and you're asking questions, lenders, I don't have a realtor, so I just went straight through the builder. With issues with the lender not answering questions, approving the loan, then I just received a random message saying, hey, so we had to pull the loan because the loan can't stay open for a certain amount of time. And I'm like, so why would you let us, asking questions, why would you let us do all of these paperwork knowing that it won't be able to stay open a certain time? Now, for reapplying, would it be best, since I have to reapply for the loan, to get a different loan officer and get a realtor to speak on my behalf?
So, Adalia, do you want to take that one
I
first?
was just gonna say, because I worked in new construction, and a lot of times people don't know that the people that work for the builder, the sales consultants, work for the builder, and so their interest is for what that builder's needs are to sell that property, or whatever you have as far as under contract for. So I would definitely recommend having a real estate agent in your corner. That person is an advocate for you. And we build relationships with our loan officers to catch things like this. So that way, you're not left in the dark to find out what's going on with my loan. Is there something here that I need to provide that's not giving? So there's a lot of things that the ball can get dropped if you don't have representation from a real estate agent. However, it sounds like in your situation, there definitely needs to be some communication with the lender. That also, a lot of times builders have relationships with certain lenders that are representing them. And so, you're trusting a lot of people that don't necessarily have your interests at stake. So not to say that's true of all builders, because I worked with quite a few of them. A lot of them are real honest and great, but you're kind of out there on your own when you go straight to the builder and you're trusting their lender, you're trusting their sales consultant. So I would definitely, ask the questions around where you're at in the process to see if you do need to start over, and definitely have a real estate agent to assist you.
Thank you very much. Thank you.
You're welcome.
Right. Well, that actually wraps up our Q&A for the evening. So thank you all for tuning in to tonight's event. And thank you all to the panel for sharing your knowledge and sharing your time with us. I'm going to turn it over to Jarrell. He's going to close us out.
Thank you all very much. I want to say, please, if you guys can quickly share your contact information, your email addresses or phone numbers or social media, however is best to contact you, so people do have follow-up questions or want to engage you in your services, they can do so.
All right, I'll start. So my email is, everybody get a pen, paper, because it's a hard email. It's my first name, Cameron, CAMERON .Buckner, and that's B as in boy, UCKNER at ACUOK.org. And then I'll give you my phone numbers as well. So my office phone is 405-717-9051. And then my cell is 405-401-3423.
Unmute there. So my contact information, hopefully it shows on the screen to spell my name, Adalia Sosanya, as ADALIA .SOSANYA. Just put so in front of Sonya, at gmail.com. And my direct cell number is area code 405-255-5923.
And you can best contact me at Ables. So first initial and then my last name at Appops, APPOPPS.com. And so I make websites and applications. So my company name is Appops, where applications meet opportunity.
Hey, Gerald, I have like one more question. Is there a possibility that you have a follow-up email and then put everybody's phone number and contact information on the follow-up email, just like I got, So is there going to be a way to do that? Because I'm trying to write down everybody's email, and yeah, I definitely missed some.
Yes, it's because cameras took so long. I apologize. Yes, I will. We will send out a follow-up email with everybody's information in there for sure. We'll do that.
Oh, thank you.
If there are no other comments from the group, once again, thank you guys for coming out. Make sure to, I guess I'll put this in the email as well, kind of the Urban League Young Professionals contact information so you all can stay engaged with us. We have more events coming up soon, and also always want to get feedback from you all to make sure that we're putting on things that are helpful or informative, keep you guys engaged. We're all stuck at home during these virtual times. So any topics or things you want to learn about or ways you want to get engaged in the community, those ideas are helpful. So we'll send out a follow-up email. We'll put everybody's contact information in there so you can contact them if you'd like to. And outside of that, I hope you guys have a wonderful rest of your evening, and thank you for taking the time out for the event tonight.